Alright, and jumping into the October recap. So, here's my overall chart. I'm sitting at $1,771,800. Slowly but surely coming back from the recent downswing. So, see, it got pretty ugly there. Got very, very ugly. But the last 2 weeks really carried me. Made like 90,000 in the last 2 weeks, really saved my whole month. And I'm at 20K off of highs, or 22K. So I'm very, very close, which is nice. And I don't want to think about it like that. I just want to show up and trade to make good trades, keep doing the right things, focusing on the right things, and acting in the right ways. And I know I still have a lot to work on. Still having these really big red days every so often that I'm not cool with. I'm not okay with that, and I'm working on that. But at the same time, I am using some of the biggest size I've ever used, so I'm getting a ton of great experience using massive size, and I'm really putting in the work. I think that experience will pay off in a big way. My biggest mistake, I would say, the last 2 months, definitely just not locking in profits. And October was, just many situations where I'm up 10, 20, 30,000 and I let them come down on me for losses. And this happened too many times to count. So you just think in your head, okay, if you just get back in reality and lock in those profits like you used to do, just that small tweak, and all of a sudden you'd probably be looking at a $200,000 month instead of a $55,000 month, right? Very small tweaks can make a huge difference. So just to sum everything up, because I know I haven't made a video in a long time, during the end period of August, that was the beginning of my drawdown. I lost $20,000 at the end of August. September, I lost $65,000, and the first 2 weeks of October, I lost $35,000, which makes the worst period of my downswing $120,000. That doesn't feel good. That does not feel good. Just knowing that you're down $120,000 from your highs. It's terrifying because you're like, well, if I lost $120,000, what stops me from doing this 10 more times? I'm 10 times away from, you get my point. It's just like, it becomes scary where it's like, at some point I need to control myself, because if I don't find that control, who's to say this won't continue? And lead to $500,000 in losses, right? Something disastrous. It can happen. It can happen to me. It can happen to anybody, and it's terrifying. You gotta try to be proactive, I guess. Find what factors are a risk for you, and then try to minimize those factors. I would say, luckily, I don't know if this is just me connecting with the market again, or if I really did change my ways. I'm still taking some big losses, but I do feel like I've zoned in and focused a lot more. I've gotten back to my basics. I've focused on the right stocks at the right times, and I've been more precise with my entries. I've been more aware that I need to lock in profits. But I still need to do a much better job of that. And going into November, that's my number one goal, is to go back to locking in profits, and I'll definitely show many examples of where that went wrong, and especially during more of a choppy market that we're in, where it's kind of a choppier market, in my opinion. It's kind of a swing trader market, where these things are going up, but they're chopping, they're washing down, and then they're recovering the next day or two. And it's kind of like moves that I would normally see on a one-day scale or 2 or 3 day scale are taking 3, 4, 5 days, sometimes 2, 3 weeks in a lot of cases. Just bigger time frames. And I know that's not really true the last week or two when you're looking at some of these crazy plays like DWAC, obviously. And PHUN comes to mind. Mark. So a lot of wild plays that had just really crazy moves in short periods of time. And that's more of my style. That's what I prefer. That's what I trade the best. And to see some of those come back, that really helped me, I believe. So that's why I say I think it's a mix. I think it's a mix of the market condition coming back to the way that it connects with me, and also being a bit more mindful of what I need to work on and what I need to change, and actually kind of taking action. So it's a combination of a lot of factors that led to this nice $55,000 green month. And just feels great to have recovered a large chunk. Feels like a weight is kind of lifted off my shoulders. And I feel motivated again to do good and to really challenge myself to get over that 1.8 mil mark, to actually find some new highs and start to get some momentum going. I'm really feeling good about that and motivated again. So I'm confident going forward I'll be able to get it together. Okay, so I want to talk about some plays. So let's talk about Mark. So there was a trend that I noticed, and it was kind of software stocks were quite hot. If you look at the profile tab, it's internet content and information. That sector got very hot as well. Just anything kind of internet related, software, tech, things like that. And on the long-term chart, you can see it has these formations and it's capable of having big runs. It gets tight, formation, had a big, nice run. And it just happens over and over. And it washed out completely, and I noticed this formation, nice and tight formation on the multi-week. It was in the right sector. I also noticed something strange where kind of the bigger floats were very hot, like the 40, 50, 60 mil floats were very, very hot compared to normal times. So I thought it was perfect. I mean, it fit all the criteria that I look for. It fit all the market trends. It was just perfect. And so what I ended up doing was on this day, I'd also noticed it kind of perked, kind of consolidated a bit, and it washed as a dip. Now in this area, because a lot of the stocks were just popping right out the gate, I tried to anticipate this area. Took some shares at 91, ended up selling it real quick in this area for a $200 loss. And then I took this dip buy entry thinking, okay, it dipped, it's holding the dip, it'll reverse out, it'll start to make a nice run. So I bought 40,000 shares in this 89 area, and it didn't do anything, and then it just tanked, and that freaked me out. So I sold, and I lost $400 on that. So I lost $600 on this, and instead of keeping this on my radar and paying attention to it, I ended up getting lost in kind of all these hot stocks, all these hot movers that were already overextended, and I just lost focus pretty much. And what you notice is it held a nice range, held a range all morning, and I wasn't around on these new entry zones. I was not there. And if I had just stayed focused, I would have absolutely re-entered a minimum 40,000, maximum 100,000 shares. And my target for this was absolutely for the hot trend. What was the hot trend? Things were exploding 1, 2, 3, 400%. I knew that this had massive potential. And the trend was also to swing, to just buy in at a good price, get a day one, swing for the major gap up the next day. And sure enough, had a major run. And the next day it peaked at 990. So you look at something like this, it's really easy to go, well, at 7 a.m., when I would have been able to trade and sell those shares, the price was at 850 area. If I lock that up at 40,000 shares, that's $280,000 of profit on one trade. If I had just zoned in, focused, and nailed it, because I had all the insight, I had all the prep time. There's a reason why I was buying it here. It's because I did the prep work. I was ready for it. I knew it had potential. I was on top of it. Perhaps too on top of it, right? Because maybe I was too early. I got involved before there was any kind of confirmation of a range hold, perhaps, or things of that nature. But I think the reality is these trades are fine. You don't know when they're going to get hot or not. These are fine. I messed up because I stopped watching it and missed the optimal re-entries. It's a re-entry problem. It's not a problem with the beginning trades. So yeah, that sucked. I mean, there's no other way to put it. That really was a bummer. But you know what? I made a nice trade on it yesterday. So let's talk about that. So there's a lot of things to talk about when it comes to trading and the different views and different setups, but I'll just go into my first trade on it as far as me going for a dip buy. So I had noticed, obviously, when something goes from 980 to 2, that's a very large dip. And it comes down, it finds that bottom, and this kind of correlates with this support area from the initial day one. So you get the support hold, it holds in this area, holds all on this day. It holds after hours, it holds pre-market, it holds this morning. So this is a really great spot because it's held 1, 2, and now a third hold. And I see this and I'm loving it. I mean, I really like it a lot. Was this the one? No, actually it was this one. Sorry, not this day. It was on the 27th, okay? So it wasn't a third touch, but I still really like the thesis just because it held here, held in this area. So it felt like it had held long enough that I felt, hey, I want to go for this. I want to go for a bounce. It just went from nearly 10 back to 2. I think I can get a bounce to 3 to kind of retest this area. If it can recover that area, well, we're going to look at a nice recovery to the 350 area. I thought there was a ton of upside there, and I liked it a lot. So I started taking this. Now, what I saw was kind of this consolidation. It perks up, washes back down. I'm thinking of it kind of like at the bottom at this point. It's a higher low. It's a bit tighter consolidation. I like that. I started taking some entries in this area. So basically in this area, and I was in 50,000 shares. Where was my average? I'm not sure. I think it was 207. No, I think it was... Okay, it was actually right here. Yeah, so what ended up happening was I was taking these micro structures and kind of playing the trend out of those microstructures, because what happened is I was thinking of it like a range. Like it was chopping in this range, and once it gets out of that range, that's when I want to take the shares to try to get the curl to test the highs, and then make that new highs breakout and form the bounce on the multi-day. So in this area, I actually got chopped. Like I lost money on this because I was trying to time it and then realized this is just a choppy range. What am I doing? Probably took $1,000 or $2,000 maybe in losses in this area. But then I kind of got, snapped out of that. I was like, okay, let me just wait for this chop to play out a bit. And then once it starts to curl out of this choppy zone, maybe that's when I'll get a more consistent, nicer move. And that held true. That started to happen for me. Now, 50,000 shares. When it comes up, if I just say, you know what, forget about the price, forget about the TA, the technical analysis, forget about where it's coming from and where I think it can go. If I just forget about all those things, and I just lock it up based on, hey, I'm up $10,000. Let me sell it here and make $10,000. If I just do that, what I found is during September and October, it was far more beneficial to trade like that than to say, hey, this is a bounce setup. It's coming from here. Usually you can get a nice bounce back to 3. Instead of thinking of it like the scale and what the technical analysis suggested, I found it's far more beneficial lately to just ignore that and to just trade based on the money. So when I was up 10K, should have just locked it up or locked in half, right? Just something. And I find it's happening too often where I'm not locking in profits, and I ended up selling this. I actually ended up selling it for a loss, for about another $1,000 loss or so. So that's been happening to me a lot, and yeah, I don't like to say trade based on the money, or that's not my preferred thing, because I want to trade based on kind of the scale and where I think it can actually go and the reality of that. But I just can't find a good reality. I can't, it's just my expectations or my view of what reality should be is not playing out in the last 2 months. And I find that if I would have just locked in profits when I'm up 10, 20, or 30,000, or locked in partials or whatever, I probably wouldn't even be talking about a downswing. I probably would be at 2 million, right? So I've known I have to make that adjustment for a while. And that's why I hope into November, I hope I'm able to actually start trading based on the dollar and not based on where I think that TA is going to go. I know it sounds backwards. It really does. It sounds backwards. Why would you're trying to trade to make good trades, right? Not make money. So why are you trading based on the money? And all I can say is sometimes it's more optimal to do that. I don't believe in right or wrongs in trading. It's what is working now and what do you have to do to adjust to be profitable right now. There's no right and wrongs in trading. It's just what's working now. So this has a breakdown. Okay, it has a breakdown. But I noticed this little perk in after hours, and then in pre-market, it washes a bit. But that doesn't really change the fact that it's trying to recover that breakdown, and it's trying to recover that range. And so, what I'm really thinking at this point is, wait a second. It's actually held that range quite nicely for 4 days now. It's still holding that major support from day one. And it's Friday, which, Friday squeezes on former hot stocks That's a lot more often, I feel like, on Friday, or maybe not. Maybe that's just me overthinking Friday squeezes, but I just like the factors. I mean, the factors are great. It's really great factors. I felt like I can buy it in the morning, it'll break out of this range, and then it'll retest the major resistance, which if I just look at the average, I'm seeing 3 all day on this. And then once that $3 test comes in, I'm thinking, you know what? There is a very good chance that this will actually succeed in breaking out of that $3 test, and it'll kind of recover some of the space and find some of those 350, that major 350 area. And that's really where I think it was going to top out at. And again, the thesis is just, it was at 10. Now it's at 2. I think it can bounce $1 a share. I don't think that's too unrealistic to be able to bounce $1 on an $8 wash. But I'm just not hitting, I'm just not hitting. That's all I can really say. I'm not hitting. So nice structure on this, and it really provided a good opportunity to get some of these fills on the curl, which I did. Never went below my entry. My only regret is I took 27,000 shares and I reevaluated the risk and the liquidity, and I realized that should have been 50,000 shares. I actually undersized. So that was my mistake. I got a really healthy uptrend, really explosive, really good. Now, this is something that will always kind of tear me apart, is the debate that this ongoing debate I have with myself. Do I lock it up based on the dollar sign or based on where I think it'll go? Like I said, I keep being shown the same thing over and over and over, and what is being presented to me is that locking in profits based on the dollar is more optimal because it just keeps happening. I'm up $15,000 if I just lock it up at 250. Maybe a little more. 15. I know. I just think around 15,000. Look, if I just say, okay, I'm gonna lock it up, it's going parabolic, I'm gonna try to just put in a sitting limit on the $50 test, whatever, and just lock up 15,000, whatever. I mean, trading based on the dollar would have worked amazing here. It would have. I can't deny that. However, if it explodes and it just keeps, and it breaks out of the $50 and keeps exploding into a halt and then resumes $1 a share above that in something just absurd and wild and crazy, then what? Then, hey, I put my sitting limit at 250, and hey, it went into the halt and it gapped and it ended up getting to 350. Oh, hey, I left 27,000 on the table, and not just that, I broke my trading plan because my trading plan was to find 3 or 350. So there's that balance between trying to stick to your plans and trying to trade based on kind of the reality. And I guess the reality, unfortunately, is these balance plays that I really enjoy playing. They're not producing the same upsides that perhaps they used to. And so I have to lock in profits a bit faster on some of these bounce plays, perhaps. It's kind of what the conclusion I'm coming to. But I didn't lock in profits, and then it came down fast, and then at that point, I just felt like it had come down so far from the highs. I'm like, you know what? I'm all day holding this. If it comes down and I get screwed, okay. But I'm all day holding this. I'll add on proper structure that I think is going to continue into the afternoon, and then I just hope that I'm going to get a nice curl to test the highs in the afternoon, and then get that breakout to 3. Get the $3 breakout, we'll get 350 area on a major bounce. And I was just really, really, really hoping for that, and I just didn't hit. I did not hit. Structure I was looking at was this consolidation, It got real nice and tight. Really, it's the same formation from the morning, just on a bigger scale. Got real nice and tight. So here's my thesis on this. So I'm sitting here and it's just hovering. I know it has to go to the upside. It has to start making an upwards trend, or it's going to break down and it's going to fail and it's never going to recover probably. So I can see it kind of battling, and I decided I wanted to try to help it. So I started taking pieces to try to pop it up. I was trying to pop the price up to start the uptrend. And I was successful in that. I bought 10,000, came down a little, added 10,000, added 10,000. I was able to really start surging that price up. And this is where I took the majority and really started getting that uptrend going. And I think that was big. Not only was it an excellent spot to add, which I suppose in reality the best move would have just been lock in profits, not have to go through all of this extra capital risk and all of the stress of will this play form a continuation or not. I basically risked all of my profits when I could have just sold it, locked in a nice fat win, and then just scooped bigger size on the dips. I know I need to do that. I'm just having some discipline issues recently. We'll see if I can get that together in November. Alright, so at this point I'm in 60,000 shares. My average is now 199. And the thought process is, look, I got in here and I'm going to risk 205. If it hits 205 or breaks 205, anything like that, I'm dumping my entire position and I'm forgetting about it. Because I've been having a lot of issues letting my positions go lately, and in my mind it was like, okay, I'm taking an ad, my average is getting pretty risky. Like, look, if it hits 205, you have to get out. You have to dump it. You just have to. Because I was not about to risk going red on this trade. That would have been crazy. And then after that, it's kind of just like, well, it's in a healthy trend. I know how Mark is. It is a chop fest until it starts to curl, until it starts to really get that healthy bullish curl. Then you'll see those healthy straight up kind of moves. I know it's a lot of chop in between though, while you're waiting for those parabolic moves to come in. So in this area, I really felt like it was supposed to start ramping hard. And I noticed it was struggling and choppy, and I was on guard. I was kind of like, okay, I'm not sure. It tried to break down, and then it quickly recovered that range and formed a 3-minute flag. And then it popped over that high, and then that's when it clicked. This is amazing, and this needs to go parabolic and start to really surge and test those highs. It's going to do it now, or it's probably never going to do it. Once this happened right here, and this got sucked back down, okay, once this came in, I knew it was over. Like, I just knew deep down, like I just knew it had just failed. Because it was at a tipping point where it should no longer chop. It should just go. And I felt like once this came in, it was over. So this is where I cut and locked in my profits. It's a great trade, just a really great trade. Super happy with it. And it was refreshing to actually cut with discipline, a disciplined cut when that weakness came in. And I did the hard thing. The hardest part of trading sometimes is letting the dream go. My dream was to get a nice curl for new highs and go into a halt or go parabolic and get that nice 350 price point and make $90,000 on this trade. But that just wasn't the reality, and I accepted the reality this time, And I traded based on those facts. And I did what had to be done, which is sell it. I sold it where I didn't want to sell it, and that takes a lot of discipline. And it was nice to actually find that discipline again. It's like, oh, yeah, I can actually be a disciplined trader. Wow, cool. IRNT, this was a really nice runner from, had some news. It was a nice bounce set up on the multi-day. Just because, it's very oversold. It was kind of forming a multi-day setup, multi-day range, and then a nice PR drop, and it started to curl in the afternoon, and it really that nice bounce from the 47 to the 10, and then it found a nice bounce with that PR, got up to 17 area. So that was very good. There's some things to talk about. Like on the multi-day, I was trying to... So this is a good view. Like I saw this day. Now this is what I was talking about recently when I said it's not good to anticipate the bounce. It's good to get a hint or insight first. And that's what this day was. I didn't anticipate this. I just saw it and noticed it. So I saw what happened. On day 2, I just chilled. I didn't play it. I just watched it because, day 2 consolidation. And then on day 3, this is where you can anticipate if it holds the support, which this is the support area. It does successfully hold it in the morning. This is when I can start anticipating a continuation for a bigger picture bounce on that multi-week, because I have kind of that confirmation that yes, this is bullish. Yes, this is holding range. Yes. Okay. Yes. Good factors. So that's why in the morning here, I started to buy it for the curl. I was buying this area right here. Actually this area. I was a little late to see it. My average was 1073. I had 20,000 shares. My profit target. So this is what I wanted. I wanted it to curl up. I wanted it to test this range, and then I wanted it to hold up and then continue. And it's really not, that's not unrealistic, especially because it just showed it can have kind of that first move, hold a range, and then continue for a bigger move. And I really felt like it can test, it can hold, and then it can continue for a bigger move. My profit target was around 12 area, maybe 1220s, maybe even 1250 if I felt the momentum was strong enough. And I'm sitting there with 20,000 shares. It's a big size, I had a great entry, curled right away, never went red on my entry. But this is where, like I said recently, bounce plays aren't as reliable. Bounce plays aren't really producing as much upside as they used to on a consistent basis. And the first kind of red flag was when I felt like it couldn't really hold a real, it couldn't hold a healthy trend. It couldn't hold its gains in a healthy manner. Kind of like on something like this, it pops up and then you see it holds in a healthy way and then continues. This didn't hold in a healthy way. It got sucked back down very far, and then as it tried to recover, it couldn't, and then it got sucked back down. And in my opinion, this is very bearish, and they rarely recover when they get sucked down to this degree. And this is just an absolute must cut. I mean, especially when it gets sucked under this area. I mean, I had to get out. I mean, I could have gotten out between 11:30 and 11:15. I mean, that's still a very good price. Still would have been around $12,000, I believe. Or maybe 10,000, but the point is, it's still a really great win. And what did I do? Well, I cut it at 1068 for $1,000 loss. Whoops. And yeah. So in a lot of cases in October and September, but a lot of cases in October, what I find myself doing, I'm getting attached to the dream of nailing where I think it can go and the best case scenario, and I just want to nail that. And I'm not letting it go when the facts are presented that, hey, this isn't it. This is weak. This is not going to meet your expectations. You have to get out because it's weak. Your play is failing. You can lock up a nice win still, and you have to get out. And I haven't been listening to the market recently. I've been ignoring it and kind of just hoping. And what do you know? That doesn't work. So instead of locking it up here, and by the way, not just this trade, but obviously like 20 trades this month, I probably could have locked up 5 to 10,000 on failed plays, and I let them become $1, $2, $3, $4, $5,000 losses in a lot of situations. Yeah, too many to count. And that's I did a lot of analysis recently because kind of during the rough period, I instead of doing what's hard, which is analyzing your poor performance and really digging into it, I tried to just pretend like everything would get better automatically. I didn't analyze, I didn't make content, I just kind of ignored it and thought, I'll just start making content again once things get better and all this. And I think the reality is things got bad because I stopped analyzing. Things got bad because I stopped making content. I stopped an important part of my process, which is reflecting. And these videos are a form of reflection and analyzing and studying. And I stopped doing that. And you can't stop putting in the work and trading or you will not perform. So anyways, interesting that it kind of like recovered a bit. I wasn't even thinking of playing it this day because it's like, you know what, this is just not consistent. But when the PR drops on this day, you get a really nice pre-market perk, so everybody kind of knows about it. And you get a situation where it's a bit different now because you have a range that is held for weeks, and you have a stock that has shown it's volatile within this range. So things are trying to happen, and now you finally get a PR. Well, okay, what if it starts to curl out of the top of range? Because you can see it tested it here, 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 here. It tested it about 5 times. And now it's testing it again with a PR and some nice volume and some nice structure. That's good recipe right there. So let's see, what can I say about this? I saw it in this area, so obviously get this type of structure. What did I do? I think I tried to get involved and I lost $250 on it, but I noticed something. A bottom came in and it recovered the range, and once that happened, something within me clicked and I said, this is going to be a massive runner. It just clicked. I just knew, like, this is going to be a massive runner. Because it's just, I don't know why, just that bottom. It's just the way it held, the way it formed a higher low, the way it recovered so fast. I just knew that this was the spot. And then I got kind of this micro development here. And I went ahead and I took this curl out. So I took this 1083 with 5,000 shares. Now at the time, I think I was in about 10 positions. at the time I tried to buy this, I said, your account doesn't have enough funds to buy this. I'm like, what? I thought my account was 900,000 or something. I don't have enough funds to buy this. Wow, I'm in too much stuff. I started selling my slow positions to get capital so I could scoop some of this. I wanted more shares, but it started moving too fast. I was like, man, what am I doing? I'm in too much stuff. And that leads into the other thing, which is I knew this was an all-day hold. I was like, okay, these things are taking a long time to curl and get going. You have to just be patient. I totally lost my mind. I lost my mind and I lost my patience, and I sold right here. I think it was just because I was in too many positions and kind of overwhelmed. I thought that it would start to curl here, and when it didn't and it had that additional test, I just overthought it. And I sold it for what, $900 or $1,000. Yeah. And then it ran all the way to 17. So, whoops, that was a nice mistake. Why is it that when things make really great explosive moves, it seems like I'm not locking in profits properly, but when things are struggling to get going, I'm like impatient. I'm like, oh, whatever, I'm out. It's like I'm selling things before they even work, but I'm not selling things once they're explosive. My mind's all over the place. The last 2 weeks I've been doing better at it, but this was an absolute disaster. And because I was taking massive size on everything else and nothing else really worked out, this was the play of this day. Like, this was the best one where all the money could have been made, and where I really should have taken 10,000 shares at 1083 and let this really roll. I could have locked in profits probably at 1283, locked up 20,000 on that or so. Would I have re-entered or caught any of this? Look, I don't know. But yeah, when you're looking at a stock that has held a range for that many days and is this far off highs, if it gets a nice PR or gets enough volume or gets enough eyes on it, right, it can make really nice bounces. And that bounce, to me, that makes a lot of sense. It does. It makes a lot of sense how it would retest some of these resistance areas from the initial, or not the initial, but from the parabolic kind of consolidation and run. Kind of that initial consolidation spot and some of this. It makes sense to me. So that was very cool to see. There's EAR. Now, in my September recap, I went over FBRX. Now, EAR is the same type of play. It's a bottom bounce, but I'm going to show you a key difference. The key difference really is the fact that it gave me a hint, and that hint is this big green day. Now, I nailed it on this green day, a little bit of luck involved on that. Just the way this was so clean, I felt like it was an appropriate spot to at least go for it. Whereas FBRX, I would go for it, it would fail on that day, and I would go for it again and again and again. Whereas this was kind of just one entry, it worked right away. That's what you want, you know, and it was really great. And after that big green day, that's kind of your green light. Okay, this is bullish again. It has proven that it is capable of being bullish again. So then I was just waiting for it to consolidate again, and I was looking at it in these days, but it never quite got the way I like. Maybe I took like a very small loss, but once it had this false breakdown recovery, then I started watching it more closely because I knew it could stair step into kind of this multi-week stair step pattern for a potential gap to fill test. And sure enough, it did. So that's why on the 21st, I got involved. Now, Not the best entries, admittedly. I mean, if I was camping this, and I was aware of the multi-day, I knew I had to watch it. Should have been scooping these very early morning entries at 7:55, 7:60. But as played, I ended up playing this structure right here. So it was kind of like this micro kind of triangle kind of feel. Kind of like this ascending triangle feel to kind of curl and test the highs. I took a way bigger size than I should have. Okay, I took 27,000 shares. 27,000 shares at 810. Holy. Yeah, I would have preferred some of those 750s area. And even kind of this zone here would be better to kind of scale into the play rather than just taking a top of range 27,000 shares. Because if it fails at the top of range and you got that size, well, you're going to be taking a nice loss. Luckily, get the pop. It does test, but it holds. I didn't get shaken out. I knew I had to risk 806. Luckily, it held. And then it started to make a nice run. Now, this is the point that I was getting at, where I'm losing my mind. I'm losing my mind. When it pops up here, I need to be selling it between 920 and 950 because that's a massive win. It's a must sell because what happens is I didn't sell. It pulled back all the way to 875. Now, what do you think happens if this? See this formation. If it doesn't break to the upside, if it breaks to the downside, what do you think happens? It just washes out and fails. So I essentially, and I know because I was having discipline issues, I probably would not have sold this if it started to break down. I probably would have got stubborn and ended up selling it something like 840, losing back 27,000 of my profits, right? Something absurd. You can't be doing that. You just can't. You gotta lock up reasonable profits. And when you're up $30,000, you have to be locking that in. And then what happens is on this pullback, it's still very liquid. I could have added back my entire position size in this 885 to 895 area. I could have taken my entire position. Now think about that difference. The price difference is money in your pocket, not to mention on the pullback, you're risking a lot of capital. You're risking your play coming down on you for nothing. So you're risking your entire win. That's so inappropriate. I should have locked it up here. I should have analyzed it again. And it's like, okay, I guess the counter argument is, okay, well, what if you sell it and then you maybe overanalyze, and so maybe you take some of this or take some of this, and then maybe you get stubborn on the downside and take a loss or something. But really, in this case, I think it would have been more like a break-even spot, and then it's bearish. Wait a second, here's the horizontal, here's the good structure, here's the re-entries. So even if I would have jumped the gun on the re-entry, I think I would have managed it well, and then I think I would have timed that re-entry properly. The main risk involved with selling and locking in profits is that you're going to miss the re-entry. That's pretty much the best argument that I can find for why you just would follow your plan and let it roll. Now look, I gotta show this real quick because I think it is relevant when you're working with gap to fills. I have seen these explode and go into halts and find 11, 12, 13. I've seen them gap overnight and find absurd bounces, which is really just like a short squeeze type of thing, to 15. I mean, I've seen these insane gap to fill plays turn into really special situations. It's possible. But sometimes in trading, Do you go with what's possible? Do you go with what the absolute best situation is? Or do you go with what's going to make you a very consistent, profitable trader in the long run? And I think recently I've lost my way, and I'm trying to go for the best case scenarios instead of what is consistent. And consistency is a lot less stressful. And honestly, if I would have went the consistent route, I would probably be up over 2 million right now. So, going into November, I would really like to trade more disciplined, lock in profits, go back to my, hey, I'm up a ton of money, let me just lock it up, and I can always reanalyze in the future. If I don't get those re-entries, or if I miss the re-entry, at some point you got to be okay with that, because consistency is just far more important than nailing those dream kind of home runs. So I would really like that. I would really like it if I could go back to that. Although, on this play, let's see, I ended up selling it at 993. I had a sitting limit at 1038. Okay, I had a sitting limit at 1038. Now, what ended up happening, it surged over 10. It got to 1018, and then it slammed kind of back down. And I thought the only thing that was going through my head was when this tested a key level. It got over 950, and then it just came back down fast, and it slammed. And it never recovered. It never found that spot, and I lost my discipline, and I never sold. I said, I cannot do that again. I can't do that again. So essentially, I came to my senses, and I let it go, and I dumped my entire position, and that's why I got that fill. In this case, yeah, I mean, it didn't really work out in this case, because it did actually hold this time and find 1060. Kind of a mistake, kind of not a mistake, though, because this is what I want to go back to. Kind of just going back to my senses. Hey, I'm up a ton of money. Who cares what happens? Get me out of this. And that's what I did here. And you know what? That's what I want to get back to. So I locked up around $50,000 on this trade. Beautiful trade. Wish I played it differently. But that's why you go back and analyze these things, so you can you can learn. And you can do things differently next time, or you can see, hey, what have I been doing recently that's not optimal? What has changed from when I was consistent to now when I'm not consistent? And the things that I'm saying are blatant. They're blatantly obvious what I'm doing differently. And they're, thankfully, they're very easy fixes, that I am happy about. That what I'm saying is honestly pretty easy fixes. It just comes down to discipline and trading in a way that is responsible. Alright, HX, what I noticed, it was consolidating, nice tight candles, consolidation for multiple weeks, started to curl. I noticed this all the way. It was forming consolidation patterns, continuing. I was aware it had ran from 2 to 7 before in the past, so I knew that, hey, if this thing sparks, it can really run a lot of dollars a share in a short period of time. I gotta watch this. Now the market in the beginning of October was very grindy, as in swing trades were kind of optimal. They were grinding and choppy on the intraday, but on the multi-day they were clean, and it was a mess. It was a bit of a mess. So the day I played it, I had noticed. So on this day, I made pre-market, had a nice pop. Okay, I'm like, okay, this thing's actually starting to ramp and get really hot. I'm seeing it kind of forming these higher lows on the multi-day. There's a range. It's hovers above the range. It's holding that range, finding hovering price action kind of above the ranges. You're seeing it over and over. And on this day, it was kind of, this is the hot day, this is the consolidation day, this is the continuation day. Kind of how I think of it. And then sloppy, low volume, but it's bullish and it's in a healthy trend. And so I went ahead and started sizing in. And my average was 20,000 shares at 473. And this really does crush my soul a bit, but this is what's like during a choppy market. It's better to kind of just trade on that dollar sign. Like if I could have just literally put in a sitting limit at 573, a lot of volume came in. I would have filled most of my shares out, I believe. I could have just locked up $20,000, but I didn't. And then when it came down, I lost composure and I sold at 515. I gave back so much of my profits. And then later in the day, maybe I scalped it, but nothing significant. Nothing significant. Maybe another $2,000 or $3,000 in profits on some of these scalps on the late day kind of curls, but nothing significant. It didn't even cross my mind that this might be a swing trade either. You know, like it didn't. I knew the swing trading was hot, but I guess I didn't realize just how hot the swing trading trend was, because it did end up going from $4 to $25 on a multi-day kind of swing trade patience type of scale. And I think that's the other thing that's been screwing with my head is I know it's kind of a swing trade market on certain plays, and other plays you think it's a swing and you just get crushed. So I'm trying to find this balance where I can get an entry, I can have patience, and I can actually find a proper swing trade. But you know, I tried that for weeks, and all it really led to was overtrading, inconsistencies. I didn't lock in profits when I needed to. I would lose emotional discipline, sell on dips that were improper to sell on. I caved under the pressure. I'm not a swing trader. I'm not a long-term patience trader. I don't do well under those conditions. And I was trying to push those conditions and push those things with size. And it just was not a good, no. If you're good at something, stick to it. And that's what I've been doing a lot of recently. It's, hey, I know that a lot of these are swings, but screw them. I don't need to play them. I don't need to do it. I don't care. I'm not going to hold into after hours. I'm not going to try this crazy thing pre-market or just whatever. It's more just going back to not caring if I'm not involved. And I think that was something that I had lost in September and October, is just losing that ability to say, okay, do what you want. I don't need to play you. I don't need to be in this. I don't care. A level of acceptance that you don't got to catch everything, you know, and certainly I lost that for the last couple months, trying to push myself to trade in a way that's just not me. And when I don't waste that mental energy doing those things, then maybe it makes me a bit more logical to play the intraday setups better. Like something like this, for example, when it recovered, started to curl and make healthy trends, and then it goes, red to green or makes that new high of day on, I just wasn't there. I wasn't playing it. And that's the other thing, just not focusing on the best plays, the best setups, the best runners, not focusing on them. Playing slow, choppier stuff that really I should ignore. So I'm trying to go back to playing those hotter stocks again as well. I see a nice trade that I made on this, right in this area. I just noticed, hey, this went from 25 it went down to 5. I saw that it bounced off that area a bit, and it tried to break down. But what I noticed, if you look at this horizontal, it broke down under it. But this is still a major support level from the initial run. It's still a very major level. And it's holding that level perfectly. So it's essentially turning into a situation where it's very oversold. It's deceptive because it looks like it just fell to major horizontal, like it's going to break down much lower. But it's deceptive because it's still at a major support on the initial run. It's still very oversold. And so it can trap a lot of shorts. It can also just be a spot where, I mean, I guess it could be a spot where longs get involved. But I more so, I thought of it like a spot where shorts are locking in profits, or you know, new shorts that get in here thinking it's going to make another one of these moves right in this area. All of a sudden, that support held perfectly, and it's popping up, and now they got to cover out. So that's kind of what that was. And I got such a good entry, and it was so oversold on the multi-week. Hey, I thought it could maybe bounce $2 a share. Pops up, comes down, it's able to hold, and then find a nice trend. And I just sold it into close because, well, I mean, I just ran out of time. And I think the goofy thing about this is if the timing was different. If the timing was just a little different, I truly believe it could have found that ramp and that bigger picture bounce if this would have just formed differently. But the way it formed, and the way it kind of ran into that end of day, it just, more times than not, it really does kill the momentum of the squeeze and the play, and they fell, you know, like quite often. So I wish that timing kind of came together differently, but still, it was an excellent win. You know, I don't know how much I made on that. I made 20, 30,000 or something, but that's the type of wins that I need. Just nice wins. I didn't go for the home run. I didn't go for the home run swing trade or after hours hold. I said, you know what? I'm up a lot of money, and hey, I'm locking it up. And I liked that a lot, and I got to do more of that. That's what's going to lead me to new highs. That's what's going to lead me to consistency, and it's been very refreshing to get back to that. Although I'm not going to pretend like I haven't made massive mistakes recently. I have. When I have 20,000, or even this week I had a $25,000 red day. Yeah, that's not appropriate. That's something is going wrong. Something is not right there. And so I'm still going through my own struggles and issues. But luckily I am finding the discipline lately to still come out green on the week overall. So that's about it. You know, I think I covered those in enough detail. I don't want to make this a marathon video, so I'm just going to end the video here. So October recap, nice to come back with a green month. Nice to be 20,000 off my former highs. I'm in a good place. I've gained a ton of experience with the sizes I'm taking, and even the struggle. Sometimes it's good to experience some struggle and get back to, you know, figuring things out. Going on a big downswing, having to mentally recover, having to get back to your basics. That's all experience that doesn't have a price tag on it, but it's worth a lot. So I'm grateful that I was able to get so much good experience. Although experience is nice, but I would like to start making some money again. But that money's only going to come in if I get back to being disciplined, consistent, and locking in profits. So let's see if I can do that in November. Alright, thanks for watching the video, and I'll see you in the next one.